Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to thank everyone who's taken the time to watch, comment, and like the videos, and a special thanks to those who have subscribed to the channel. I really appreciate it. We're up over 80 subscribers now, and we continue to grow. And for those of you who may not already have done so, consider subscribing to the channel down below and hit that notification bell so you're notified whenever I upload any new videos and you don't miss out on new content. For those of you who may be stopping by for the first time, on this channel we focus on a passive income investing strategy by buying stocks in good companies that pay dividends. Again, it's not rocket science. In my opinion, the best way to do anything is to keep it as simple as possible. So it really boils down to consistently dollar cost averaging, buying dividend growth stocks in growing companies with positive cash flow that covers the dividend and companies that return a high yield on their invested capital. I utilize both a dollar cost average approach, consistently investing into the stocks within the portfolio on a bi-weekly basis at a minimum. I get paid every 2 weeks, so I use those funds, but I also do large purchases if I have extra funds that I want to put to work. I cover all my investments into this portfolio on this channel, my dividend growth portfolio. I do not have a paid Patreon account, nor do I intend to ever have one. We all have enough to pay for, so it's free to see what I'm investing in. But if you'd like to help out the channel, dropping a comment, liking the videos, and subscribing helps the channel out tremendously. I also have some links down below. One of them is a link to my Webull account. So if you're looking to start your own investing journey, FIRE journey, if you use that link, you'll get some free stocks whenever you sign up and deposit funds into the account, as will I. So that helps. That's one way to help me out. You don't have to use my link. You can sign up on your own through Webull or use somebody else's link if you prefer. No big deal there. Now, I do not cover all my activity on my Webull account on this channel. It's more speculative in nature with higher risk, so I don't want to be anyone following my high risk plays. You can lose money significantly so in some cases, and that's really where I put some funds that if I lost it, it's not really a big deal to me anyway. In today's video, we'll be covering the most recent activities in the portfolio. So without any further delays, let's get right into it. So activity started on April 11th with the AT&T spinoff, and I had about 140 shares of AT&T, and they did a spinoff Warner Brothers Discovery, as you can see here, and I picked up 36.32089 shares of the new company that spun off. So this didn't cost me anything. It was just based on the shares that I had previously in AT&T. So now I have a new position. WBD is the ticker. I think they're both up a little bit since then. AT&T's price did drop down. It was about $24. Now it's about $19, but it's more than made up for with the new shares. I think these WBD is about $20 as well. So I think I'm up already based on the spinoff about $800. I'd have to do the math, but pretty close to that anyway. So that was the first activity. Again, nothing to do with me, just owned AT&T prior to the spinoff, so I received the new company shares. Johnson & Johnson is one that I own as well that's going to be doing a spinoff, so something like that will happen again in the future. It's happened in the past. DTE is one that I get some shares for DTM when they spun that off. You'll see that later. I actually sold some of those shares, but I'll cover that here in a minute. And then another one, Realty Income, ticker O, had a spinoff last year, and I received some shares of that company as well. And I believe I sold those off as well. So sometimes I hold these. I'm holding these right now. I do not believe Warner Brothers Discovery is going to pay a dividend, but we'll see if we get some price appreciation. If I hold it for a year, it will be a little less taxes, so I may look to do that. Next activity was on April the 13th. I sold, like I said, DT Midstream, 5 shares at $56.57, resulting in $282.84 back into the portfolio. I reallocated that elsewhere. DTM was one I was not really adding to at all. Again, it was a spinoff from DTE that I received. DTE is a service provider in my area for electrical and gas, and this was really their midstream gas section that they spun off. So I maintained DTE because it's my service provider, and my intent is to buy enough shares where basically the dividends from DTE pays for my electric and gas service. That's my goal anyway. So I really don't have any need for DTM in my portfolio. Wasn't adding to it, so I saw it was up quite a bit. I think it was up 20 or 30% since the spinoff. So good time for me to cash out and utilize these funds elsewhere. Let's look where we put those to work. On the 13th, we took some of those funds and a few dollars more, and we bought 10 shares of Omega Healthcare Investors, ticker OHI, which is a REIT. I covered it in one of my stock pick of the day series this week as well. This REIT covers elderly healthcare housing, so it's one that I'm really high on, really long on. It has a very nice dividend payout ratio of 9%. So it is a high dividend payer. It was much higher than DTM, which is why I took the funds and rolled them over here. Had a little bit left, so I picked up one share of Vail, ticker VALE, at $19.89. Vail is a mining company in the materials sector, guys. It's one I really like. I was picking up last October, November timeframe. I think I have about 64, 65 shares. Another high payer. I think it's around 13% dividend payout rate. Has grown quite a bit since I picked it up last October. I was getting it for around $14. As you can see, it was here around $19.89. It's been as high as $20, almost $21 per share. So I like to see these pullbacks. If I could get it back down in the 16, 17 range, great, but I don't mind adding 1 or 2 shares to it. So with the funds that I got from DTM sale, like I said, and a few other dollars, I reallocated those into Omega Healthcare Investors and into Vail. Next up, on April 14th, I took about $500 and rolled in $497.61. With those funds, these are new funds invested into the account, I picked up Bank of America. I've been adding to this one significantly over the last few weeks. Ticker BAC, out of the financial sector, at $38.43. Anything under 40 to me is a buy for Bank of America. The financial sector seems to be having a little bit of trouble right now. Huntington Bank shares, also out of the financial sector. I picked up 10 shares there, ticker HBAN, at $13.40. To me, anything under 15 is a buy of Huntington Bank shares. And again, I had a little bit money left over, so as you can see, it's even come down a little bit more. 1949, I think the last slide on the 13th, we got it at 1989, is Vail, out of the material sector, ticker VAL. We added 1 more share there. And that was really all for the activity, the additions and subtractions, but let's do a quick portfolio update overall. Our current portfolio value sits at $108,000 and $882.37. Tongue-tied there. And the dividend yield currently sits at 4.135%. And guys, this is what it's really all about. This is what we're interested in, what we do the dividend growth portfolio investing for. The annual dividends are continually to go up, $4,501.99 annually. I think that's up about $50 from last week this time. Again, partly because of the reallocation of funds, partly because of some companies increased their dividend payout rates. I know Procter & Gamble was one that did that for me, and then the additional funds I put in every time I add to the portfolio. Quick run through the allocated sectors. The weighted sector ratio is 10.97%. Communications, consumer discretionary is at 3.65. This is one I'd really like to add to. Really looking at Whirlpool, put it pretty heavy. May start dollar cost averaging into Whirlpool here shortly. It's one that I feel is undervalued. Consumer staples is at 9.92%. Energy is at 10.74. Financials, which we added a significant amount this time around, is at 8.73. Healthcare, 11.61. Industrials is sitting at 12.21%. Technology has crept up to 10.49%, so like to see that. Cisco, Intel, those are some that I'm watching. Intel, I did as well as the stock pick of the day series this week. It is down below $45 again, or right around 45. That's one that I like under 50 as well, so there might be continuing to add there here next week if it continues to stay down. Material sector at 6.14%. Utilities at 4.99%, and REITs and real estates, Mega Healthcare Investors, the one we add to this week there, is at 10.54%. Guys, if you like this kind of content, consider subscribing to the channel. Drop a comment down below. Let me know what you think. What did you add to your portfolio? Are you sitting on the sidelines with a lot of volatility in the market, waiting to see what pullbacks continue? Or are you adding? And let me know what you're adding. I really like to know what you guys are adding to your portfolios. If you have some suggestions for future videos, let me know as well. Like the videos if you like the videos down there. Drop a thumbs up for me. If you don't like them, drop a thumbs down. Let me know what you don't like about the videos, what I can do to improve. Again, always interested in your opinions, comments, and with that said, guys, that's the end of this video. As always, I appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell, subscribe to the channel, drop a comment. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions and opinion. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you next time, guys. Happy Easter. Guys, should be Easter Sunday whenever you see this. Hope you had a good Friday. on Good Friday, and hope you guys are spending some time with family this weekend. Again, happy Easter. Don't let your dogs get out there and get those Easter eggs before your kids do. We'll see you in the next one, guys. Thank you. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and intended purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.